Hi everybody! We'll be taking a dive into the latest earnings of America's largest bank, JPMorgan. I'm Martin from Robalyst. Follow me so we can get the answers together, because it's not the numbers, but the reasons behind them that matter. There has been a lot of chatter on the street about the tough environment for banks because of the falling interest rates. But we can see that JPM did well enough last quarter. Net revenue rose 6%, driven by a 25% surge in fixed income markets. Apparently, the large moves in bonds we've seen lately proved to be very profitable for JPM. We can say that this is a strong result, having in mind that net interest income, which is very important generator, increased only 2%. We find the reason for this in the consumer banking, where net interest income fell flat year over year. Another important metric, the interest rate spread, fell 15 basis points to 2.1% because the bank's interest expenses surged 16%. At the same time, JPMorgan kept its loans volume flat year over year by disposing of 10.5% of its consumer loans. Non-interest revenues more than compensated for the compressing interest income, and the main driver for this was a 16% increase in principal transactions, which reflect the bank's market-making activity. Again, JPM proved to be well-positioned to trade profitably in the volatile markets we are experiencing the past few months. Turning to JPM's segments, consumer banking showed resilience despite its weak net interest income, and revenues rose 5%, driven by 10% increase in lending and deposit fees. At the same time, JPM's commercial banking was hit by a 5% decrease in net interest income and posted a 3% fall in total revenues. The company's bright spot last quarter, its corporate and investment bank, which brings $9.3 billion in revenue, boosted not only sales but also company profits, with pre-provision profit rising 8% on the back of a 10% increase in investment banking income. At the same time, the falling profits of JPMorgan's commercial banking weighted on the reported net income. Overall, we can see that JPMorgan's margins remain at very solid levels. It's important to mention that those results are adjusted by excluding a one-time gain on loan sales in home lending booked in this quarter. In the end, I would like to turn to the consensus estimates of the bank's sales and income growth for the next year. As we can see, Wall Street expects flat revenues and falling profits. This looks overly pessimistic, and the bank usually beats that kind of expectations with ease. To wrap up, it's important to know that JPM continued to deleverage on risky consumer loans. At the same time, the company is growing deposits and assets under management very well. For the upcoming months, we should have also in mind that the strong revenues and profits posted by JPM's investment banking are unsustainable. Thank you for watching. Subscribe to our channel so you know the things that matter. More companies, reports, and regular content are coming shortly. Also, go and sign up to www.robalyst.com. Check Apple, Amazon, or Bank of America. Get the answers you need when you're thinking about a company, because Robalyst has done. Thanks again, and don't forget to give us a thumbs up or simply tell us what you think. See you soon.